Welcome back. Godawari Power Ispat has delivered a weak second quarter. There has been a sharp drop in the pellet realization, and that's resulted in the EBITDA for the company declining by close to about 50%. To discuss this and more, we are joined by Abhishek Agrawal, the Executive Director of Godawari Power Ispat. Afternoon, and thanks so much for joining in. This is Rima here. I think in Q2, the quarter gone by, your pellet realization was about 8,200 rupees per ton. Could you give us an update on what the realization currently stands at? And do you have any indication of what the outlook could be?
Hi, very good afternoon, Rima. As you said, in the last quarter, the realization was about 8,200. For the 6-month average, it's about 9,150. And currently, the prices stand at about 8,200 levels.
8,200 is what the current levels are, you said.
Right.
So they are at par with what the Q2 period saw in terms of pellet pricing.
Yes, exactly.
And what is the outlook?
The levels, yes,
okay, what is the outlook going forward? You expect any improvement in these prices, or will they continue to stay at current levels? And if yes, what's driving the pricing right now for pellet?
See, I don't see much upside from here on because the monsoon is over. So the production of iron ore lumps from NMDC and other mines in India will go up. So that will create pressure on pellet. But the advantage Godawari has is of the high-grade pellets, for which we are able to fetch at least 1,000 rupees premium compared to our peers. So that will keep us, driving going forward. And I expect the prices to be the same levels in this quarter.
Okay. I think the FY23 guidance shared by you is iron ore mining at 2.7 to 2.9 million tons and iron ore pellet volumes of 2.6 million tons. Are you on track to achieve it, and what will help you? What should we expect in the second half which will drive these numbers for you?
We are very much on track. 6 weeks back, we got an announcement of ECA for pellet from 2.4 to 2.7 million tons. So we have revised the guidelines from 2.4 to 2.6 million tons of pellet, and currently we're on track to achieve that. On the mining side, as the guidance given at start of the year, we are very much on track to achieve that.
Okay, so 2.4 million tons in terms of volumes you will do, you had reduced it. So there are no further pressures that you're expecting in the second half for the volume number. Considering what all you told us in terms of volumes and the kind of realization staying stable, what will the margin picture look like? You had told us 20 to 25% expected. First quarter was really strong. Q2 saw a sharp decline in margins. Do you stick to this guidance?
Yeah, we are hopeful with the current market scenario. We are hopeful we should be able to achieve a margin of about 20% going forward.
Of a 25% is not something on the upper side. That is not something that you'll be able to achieve.
This is very difficult to predict, because the market is so volatile right now. Every day prices are going up and down. But on a practical numbers, I would say 18 to 20% is a practical figure.
After the 45% export duty, how has your sales mix changed?
So see, of course, export has been totally zero after the duty was imposed, and currently our entire sale is domestic only.
Okay. All right. So is now demand, you have spoken about demand going up, but post monsoons, what kind of demand revival have you seen, and do you expect it to continue? Because generally the idea is demand is much better than pre-COVID levels across sectors. Is that something that is working out for you as well?
See, I think November to April is the peak season for consumption in India because of the weather. So I foresee the demand should go up. And the advantage which is playing in our favor is the coking coal prices are still quite high, because of which our high-grade pellets, you are able to fetch a good premium in the domestic market.
You acquired AFAL, a promoter entity, for about 130 crore in June earlier this year. Is this entity profitable? Who owns the balance 22%? Is there a chance that you would look to buy it at a later stage?
Yes, going forward, we will look to acquire the remaining stake. The entity is profitable. If you see the numbers of Q1, the balance sheet was profitable. In Q2, the market turned upside down. The export demand was subdued. Internationally, the prices crashed. So that's why probably Q2 numbers are not affecting what we supposed to achieve. But going forward, when the market stabilizes, we are hopeful we'll come to again positive.
Okay, so that 22% that you're planning to buy, what will the valuations be there? You must have put in some calculations in there. So what kind of money are you planning to pay for that? And that 500 crore rupees, that cash that you have in your books, is it something you'll be using for that?
See, we are right now generating enough cash on monthly or quarterly basis. And as we said earlier also, any expansion will happen in under Godawari's umbrella will be, funded by internal accruals. So all the cash reserve we are doing right now will be utilized for any kind of expansion as well as
Okay.
Abhishek, looks like we have you on a very scratchy line. We'll try to connect with you again because we don't seem to be able